Hello guys, welcome to another amazing YouTube series, and in today's video we're going to be talking about how to identify institutional trading patterns. And in this video I'm going to be doing my best to show you how you can identify the footprint of the institutional traders in the foreign exchange market. And I promise not to make this video long, but if you stay focused and watch to the end, you're going to understand why certain patterns actually happen, and you know when your tops and bottoms are being held by these institutional patterns that occur frequently in the market, and know how to spot when the institutions are trading so you can trade alongside them. So without further ado, let us dive into the video. Now, before I start talking about the institutional trading pattern, do remember that there is a 5 free forex trading program ongoing at Learnity. So if you're a beginner trader, you're just starting out, you want something to whet your appetite, and you want something to start with which is free, you can actually register for this 5-day free forex training program ongoing at Learnity. All you simply need to do is use the link in the description below. Make sure to sign up, save your spot, and then you can attend this 5-day free forex training. So this 5-day free forex training has been made to help you understand everything about the foreign exchange market, how to get started, and how to place your first trade in the foreign exchange market. Okay, so now we are on a live price chart, but first let me explain to you how I use these institutional patterns, which are trading patterns that you can easily identify on your chart, so you know when the institutions are involved with price action, and you can also get yourself in alignment with them. Now, there are two practical institutional patterns that I use. One which is the engulfing candle, or a very thick up close or down close candle, and the second is the fair value gap. And I'm going to show you how to use these two. These two works hand in hand, and in a minute I'll show you how you can use them to spot if the institutional traders are actually involved with the market movement or if they are not. Now, the first thing you need to understand is that when using this pattern, it is not just a one trick pony pattern that you just use and or you just put on your chart and it works marvelously. You need to also align yourself with the current trend of the market, where price has been recently and where price is going to, so as to improve your edge in using these patterns. So the first thing I said was the engulfing candle. Now, this engulfing candle is very simple and it's straightforward. When you see a long engulfing candle, right, engulfing a previous down close candle, that engulfing candle is the first step to actually think if the institutional traders are actually involved in the market. Now, the second, which I mentioned, is the fair value gap. Now, what does this fair value gap do? When you see price action, for example in this Euro USD chart, when you see price action making higher highs, and you see that there is a fair value gap being created and not utilized currently, and then another high is being created or taken out, that fair value gap that has been left is a proof that the institutions are not willing, or they don't want to go back to reprice the price of that asset lower before going higher, which means that that fair value gap that has been created, has been left unused, is actually going to be a support level in the future. For example, we have this one here. We can see that a fair value gap is being created here, and after it was created, it was not utilized until this high was broken. Now, this is telling us that this is a break in market structure, which means the higher prices is needed. Plus, we already know that on a higher time frame, we are looking for higher prices, right? Now, this fair value gap has not been utilized. Anytime price comes into this area, we'll be looking at this area as our support level, and we can also blend this with our support and resistance idea. For example, we have this old low here. We can still stretch it. This was where price actually stopped, moved forward, dropped, and we also have a breaker block here. We have a breaker block here, but our main focus is going to be on this area here, which is what, in an area where we have an engulfing candle and also a fair value gap. Now, you can see how price actually stopped in that area, utilized it, and continue going higher. Now, the important thing to note is that when you see the engulfing candle, you also want to see if a fair value gap is there. Now, if the fair value gap is utilized before making a new higher high, then that is probably not the level you're going to be using for your support or your resistance, right? Because it has already been utilized. For example, after price made this high here, it came down, utilized this fair value gap, so it has already used this, and this is not of interest to us. So what we want to see is an engulfing candle engulfing the previous down close candle in an example of a bullish case, and then we want to see a fair value gap not utilized before a market structure high is taken out. We also have this one over here. You can see we have series of fair value gap on our 4-hour time frame. We have this one, which was not utilized over here, and we also have this other fair value gaps over here which were not utilized. So there are a bunch of fair value gaps that were not utilized. So if we actually see, after this fair value gaps was created, the only one which was utilized was this one over here. All right, and then there was a break of market structure, a new high created. And once this new high is created, it is telling us that there is need for higher prices. And if we go on our daily time frame, we can also see that we actually have interest in looking for higher prices. Now, this area that has not been utilized becomes an important area for us, because we want to watch this area and see when anytime price comes into this area, we want to see that act as a support, and also blend it with our other understanding of support and resistance, which are something like old highs, mitigation blocks, and the rest of them. So if you look at this area, we have an old high here, we have this old high here, plus it is blending in with this fair value gap which has not been utilized, and you can see immediately price came into that area, dropping below this low, which is also a grab of liquidity. It changed what market structure and started going higher. So this is how you can actually identify if the institutional traders are behind a move or are sponsoring a move, because they will leave pause or gaps in this price action that they would later utilize to actually look to reprice the price of that asset to wherever they want it to go. So identifying the engulfing candle and your fair value gaps is also going to help you identify when the institutions are sponsoring a move in the market. And if you understand this trick, you know what move to align yourself with and what move to stay out from. So if you want to learn more about these patterns and how to properly identify them, you can easily do this by subscribing for our mentorship or actually purchasing our advanced forex trading course, and you can do that by using the link in the description below. All you simply need to do is use the link, go to our home page on our website, and then request for a mentorship or you purchase the advanced forex trading course. All right, because we have taught in detail everything you need to see or everything you need to understand, and how to use these institutional patterns alongside other strategies like a breaker block, order block, your mitigations block, and every other aspect of support and resistance you can find in the market, because this will help you identify what moves are actually important to trade and the ones you can easily identify as a low probability trade. So guys, this brings me to the end of the video. Remember, you can follow us on our social media handles on Facebook, here on YouTube, Instagram, and also on TikTok. And if you have any questions, inquiries that you would like to ask us, you can do that by sending us a mail at learnity@gmail.com or giving us a phone call on the number displaying on your screen. And until we meet again, from me to you, it's bye for now.